This video will cover Part B of Problem 1-7B found on page 45 of your textbook. There is a link to the Part A portion of this video preparing the transaction analysis. First thing you should do is download the financial statement handout. It's called financials.pdf. It can be found under week 2 under our class lecture. So if you click on the financial PDF file, download this file, and I actually would print it out if I were you. So I'd go ahead and print this out so you can follow along with the video as we complete Part B. So you'll notice here on the first section we have our income statement. Second financial statement is our retained earnings statement, and the third is our balance sheet. The cash flow statement we will not be preparing at this time, but that's the fourth basic financial statement. So the first thing you'll notice is a heading. You have the company's name, income statement, and for the period ended. This is for the income statement. So what we're going to do is we're going to use the amounts we've already calculated from our Part A, and you'll see we have totals for cash, accounts receivable, equipment, accounts payable, common stock, dividends, and revenues and expenses. So for our first financial statement, we will note the name, Nico's Maintenance. And this is a corporation, so let's go ahead and put INC Incorporated at the end. And our second line of our heading will be the name of the statement, which will be income statement. You may see statement of income or statement of earnings. These are other aliases used to prepare the profit statement. So this is our income statement. It's going to tell us how much money we made during the course of the period. And the next line will be our date. So for the month ended. And since we're dealing with June, we'll do June 30th. And I'll just go ahead and use the current year. And this will be our heading. You'll notice that it's for the month ended. It's a starting point, June 1st through June 30th. Then we will list our revenues. Now for the Nico Maintenance Company, you'll notice that we have fees earned. So we have 4 different transactions dealing with fees earned. So that's what we're going to use for our revenue account, fees earned. And since we are using Excel, no need to get a calculator. We'll just go ahead and add up the 4 amounts. So the 850 plus the 7500 plus the 7900 and plus the 675. And since we already had it in the spreadsheet, we should get the 16,925 we previously calculated. The next we will do the expenses. I'm going to start with the first one, rent expense. Rent expense will be our first account. And the next one will be, let's scroll down, advertising expense, then salaries expense, and another salaries expense, so telephone expense, utilities expense. So rent expense, advertising expense, and what's it? Salaries expense, and telephone expense. And if you want, you can abbreviate, but just make sure you get in the habit of including the expense after the type so that you don't confuse it with another account. So utilities, you can do abbreviation if you like. So we have our expense listed. We want to make sure we include the amounts. So rent expense, there was just one for that. Now you'll notice that I originally put a plus, but I'm going to do a negative because the amount was entered in as a reduction or deduction in our retained earnings. So we're going to do negative, and then we'll reference the advertising expense, the 1150, and then the salaries expense. We had 2 of them, so let's go ahead and make sure we add up both of these amounts. So salaries of negative 800, and then another salaries expense of 800. That would be 1600, and then our telephone expense, and our utilities expense of $890, and so we have them all listed. Now we want to make sure that we sum them all up, so SUM equals SUM, and we're going to highlight the range, and this will be a sum of our total expenses. And what we'll do here is we'll calculate our net income, which will be the difference between our total earnings and revenue, so our fees earned minus our total expenses. And I like to make sure we put a single line underneath our calculation and a double line under our final calculation. So this right here is actually a single line. Let me make it a little darker so you can see it. So we got a single line underneath these two amounts that we are calculating, and you also want to make sure we got a single line underneath here. So we are subbing these amounts, doing a summation of these 5 amounts, and we've calculated our net income, and we've completed our first financial statement. And next we will complete our statement of retained earnings. It's for the period ended as well. So there's a starting point and an end point, beginning of the period and the end of the period. We're going to do our heading. Now to save some time, I'm just going to go ahead and reference this since it's already in Excel. I don't want to have to retype it again. And then I'm going to type in retained earnings statement. And you also can put in statement of retained earnings. It's the same difference. It's just another name to call the same statement, an alias. And we're going to do for the month ended June 30th, which is the last day of the period. Now you could be doing monthly financial statements or quarterly, which includes 3 months, or a year, which would include 12 consecutive months. Now for our beginning retained earnings, since this is the month of June, I'm going to change my beginning to June 1st, which is the first day of the period. And I'm going to change my ending to June 30th, which is the last day of the period. So this is my beginning balance. Now since I'm a brand new company, my beginning balance will be 0. Now going back to the handout, you'll notice that we are going to list our net income or net loss. Now if you have a net income, you will add it. If you have a net loss, which is indicated by the parentheses, you will subtract it from your beginning balance. Well, we have a net income, a positive number, because our revenues exceeded our expenses. So we're going to add our net income. And I'm just going to go ahead and reference this cell because, again, we don't want to have to type in all these numbers. And this will be our subtotal. I'll add these two together. So plus the beginning balance plus the current period's net income. That'll be my subtotal. And then I will subtract my dividends. Now where do I get my dividends from? I'll have to go to my detail. I'll see that I do have one amount for dividends in the amount of negative 4,000. I'm going to go ahead and reference that cell, make sure I put the negative in front of it so it's positive on the sheet, and I'll take the 7,135 minus the 4,000, and you get 3,135 for the amount for our ending retained earnings balance. We're done with our second financial statement. Now our last one will be the balance sheet that we will be preparing. Keep in mind the cash flow is not until a little bit later on, but you can reference it in your reading for chapter 1. And we will put the company name first. We will type in balance sheet, type of statement, second line. And because this is the balance sheet this time, we're going to do a snapshot, a 1 moment in time check of our balances. So this will be as of the last day of the period. So we'll type in June 30th, and then we will list all of our assets. We have cash, accounts receivable, and equipment. It's going to list cash first, then accounts receivable, and next we will have equipment. And with the equipment, the balances are available to us. So let's go ahead and just reference them. The $130,060, Then we have the 675 in AR, accounts receivables. And then we have our equipment in the amount of 2,400. And I'm going to just, I like to do the formatting the same. So that 2,400, and we want to add up our assets. So again, we'll do the summation. So SUM, highlight the three accounts, enter it in, and we should get $133,135. And again, we'll have a single line above the number and double underlines underneath to indicate no more calculations. Then we will go to our next section. You'll notice that the liabilities and stockholders' equity are listed below. If we go back to the handout, you see I have them listed to the right. Just keep in mind that this is just a depiction of the basic accounting equation. So we have our assets on the left, we have our liability and equity on the right. And we are going to prove that our total assets are equal to our total liabilities plus equity. Here we're just, because of spacing concerns, we're using the report format where the liabilities and stockholders are directly underneath the assets. So our first liability we're going to list is AP, which stands for accounts payable. You got that? Amount. Now you'll notice that the amount is 0. Now because we are just preparing our first financial statement, this problem, the accounts payable happens to be 0 because we paid off our debt. But I wanted to show you the formatting, so I'm just going to put this amount in there so you can kind of see where it falls. And then if you have multiple amounts, then you would actually list your or calculate your total to list in your statement, which will be your total liabilities, and you would just add up the sum of the several or the multiple accounts payable, multiple liability accounts. So there might be notes payable, salaries payable, other payables here. But this is how it will look. But normally you won't put an account on there if it has it doesn't have a balance. Then we have our stockholders' equity, and that is comprised of our paid-in capital, which we call common stock, and then our overall earnings, which we call retained earnings. Now with our retained earnings, we are just going to take the amount that we have as of June 30th. So simply put, we're just going to reference the ending balance from our previous statement. And then for our common stock, we're going to go back to our accounting equation, and it's up here. We have the investment, which was the 130, so I'm going to reference that. And what we're going to do is we're going to add these two together. So we're going to add those two, the 130,000 plus the 3,135, and this will be called our total stockholders equity. It'll be apostrophe S if there's one stockholder or shareholder. If there's multiple shareholders, then you'll do S apostrophe. And we will add the total liabilities plus the total equity, and that total should agree to our total assets to prove that we are in balance, and we're done. So if you have any questions, ask in Google Hangout, and you can use this to complete your homework for Chapter 1.